everyone, welcome. This is Business Incorporated. I'm Chimeze Obi Iwawu. Coming up on the program today, AFDB launches second phase of West African Capital Markets Integration Project backed by a $850,000 grant. Afrexim introduces oil-fueled financial instrument for African operators. The U.S. Trade and Development Agency supports clean energy access and women's entrepreneurship in Nigeria. We tee off today's show with market numbers from the African continent. Just like in Wednesday's session, only the Jersey index in South Africa was lower at intraday by 0.20%. Nigeria's main index sustained the positive sentiments and was up 0.31%, while the EGX30 in Egypt jumped 1.17% at intraday. Kenya ended Wednesday's session negative. And moving on to the Middle East, markets there in the Gulf region were all in the red at intraday. In the UAE, Dubai's main index took the heaviest hit by 0.79%, while the Abu Dhabi index was 0.32% lower. Elsewhere in the region, the Qatari index fell 0.44%, while Saudi Arabia's index was down 0.14%. And moving on to Europe now, stocks pulled back slightly today as investors consider the ramifications of a surge in coronavirus cases in the region, and EU leaders discuss possible blocks on vaccine exports. Let's talk to Chelsea now. Hello, Chelsea. Good afternoon. Well, the EU officials are meeting today to discuss the bloc's coronavirus strategy and vaccine issues. What are the expectations there?
Well, there's a lot to be discussed here in Europe among leaders today, and they have a very full agenda. Really, the most important thing is trying to speed up the vaccination effort here in Europe, which has been going very slowly. The vaccination rates are much below those of other countries like the US, the UK, and of course Israel. So part of this is because the EU has been dealing with supply shortages from some of its main suppliers, mainly AstraZeneca, have fallen well behind on their planned deliveries to the EU. And in response to that, the EU has put in place new rules that would allow it to ban exports of vaccines to other countries under certain conditions. That's something that they will discuss today. EU leaders are expected to support this new rule that would give them that power, but there's still a lot of discussions to be had about how widely they plan to ban exports of vaccines, because there has been a lot of criticism that this would really create a lot of tensions with other trading partners, with other countries that also are scrambling for vaccines right now. Another big topic that's going to be on the table is the proposals that the EU has made for a digital vaccination passport. This is something the EU has been behind, but it's unclear how fast that process is going to move. This would essentially be some sort of phone app where people's vaccination statuses as well as testing results would be in, and hopefully it would allow the reopening of travel at some point down the road. So those are two big topics, and of course we're likely to hear European leaders stress just how important it is to maintain coronavirus restrictions now that we're seeing a third wave of infections here in Europe.
Now, all the development out there having Chinese social media users lashing out at retailers including Adidas and Nike after Western government sanctioned China earlier this week for its treatment of its Muslim population. What's the discussion out there concerning this?
Well, this is something we're actually seeing have quite a big impact on markets here today. If you look behind you can see that the DAX has fallen quite a lot, and this is largely because some of the big retailer stocks have really tumbled. Adidas down almost 6% at this point. Nike, H&M also falling between 4 and 5% on the market. So investors are taking it very seriously. These threats that we're seeing on Chinese social media, that Chinese consumers plan to boycott some of these Western retailers. This comes after the US, the UK, the EU all imposed sanctions on China earlier this week because of their treatment of the minority Muslim population, the Uyghurs, in the Xinjiang province. We'd already seen a lot of Western retailers say that they don't plan to keep sourcing materials, sourcing cotton from that region because of concerns that it's being made with forced labor from the Uyghurs. But in the light of these sanctions, social media users in China have really been latching on to that. We've seen celebrities, singers, social media influencers saying that if these Western companies are going to boycott us, we're going to boycott them as well. And for Western companies, China is a major market. They can't really afford to lose the Chinese consumer.
And the Suez Canal in Egypt remains blocked by a container ship for the third day. Yesterday, we saw oil prices spike on fears of the blockade, the blockade would disrupt supply. So what kind of impact is this having on markets today, aside from the China story?
Well, the long-term consequences of this aren't quite clear because it's not clear how long this disruption is going to last, but it will be quite expensive and it will delay a lot of shipments. Already, we've seen reports that this is costing $400 million an hour, and there are about 150 ships that are blocked at this point from passing through the canal. This is impacting everything from livestock stuck on the ships, particularly oil and natural gas that is meant to be crossing through. That is why we saw oil prices spike yesterday, because of concerns about the supply shortages we could see from this. But there are also a lot of consumer goods, toilet paper, clothing, machinery, all sorts of things still on this ship. So shipping companies are having to decide right now whether they want to go a different route, potentially go around the Horn of Africa, adding about 2 weeks to their delivery schedule and a lot of extra cost, or if they want to wait it out. There had been a lot of hope that they would be able to get this ship unstuck pretty quickly, but the comments we've heard over the past few hours have been quite negative. A lot of people involved in this operation now don't think it'll be possible before the weekend, and if we see several more days of these ships being stuck, that will really put a lot more pressure on global supply chains and really delay the shipment and delivery and arrival of a lot of really necessary products.
That's quite unfortunate. Well, we'll continue to track that and see how that impacts the market in the coming weeks. Thank you very much, Chelsea. And in the UK, a number of corporates are making headlines today. Let's get a sense of those and the market update at Intraday. Let's talk to Juliana. Hello, Juliana. Good afternoon. Well, Deliveroo is in the news again today. A survey shows some Deliveroo couriers are earning as little as £2 an hour. This company is preparing for an £8.8 billion stock market flotation. That's next month. Now, with these social issues surrounding the company, how do you see their IPO playing out?
Good afternoon, Chimeze. Well, it's set to be the biggest London Stock Exchange float in a decade. And just a couple of weeks before that, Deliveroo, as you quite rightly said, is in the news for all the wrong reasons. And this involves the gig economy scandal, which has built up over the past couple of weeks. And what we've had is that two of the UK's biggest investors have decided that they are going to pull any investment from Deliveroo because of the way that they treat their workers. Now, this has been a long-running scandal. Deliveroo has won a couple of high court challenges in the UK about the rights of its workers, and this particular story evolves around the London Bureau of Investigative Journalism. They conducted some reports, and they suggest that Deliveroo drivers are earning £2 per hour. Now, Deliveroo have strenuously denied the findings of this report. They say that some of their drivers on a very busy day could be earning up to £13 per hour. And one of the reasons why they're not giving them workers' status is because basically if you're self-employed, you can work for anybody you want at any time you want. And drivers and individuals in the gig economy prefer this. But this is a long-running scandal. Even in the IPO prospectus that was released by Deliveroo a couple of weeks ago, they have actually set aside £112 million to try and fight some of these high court challenges, particularly on the continent of Europe, where they're taking this legislation very, very seriously. And of course, last week, 70,000 drivers working with Uber, but not Uber Eats, which is the delivery competitor, did win the Supreme Court challenge of giving them these rights. So it is a long-running scandal, but, you know, Deliveroo are still packing the punch. They will be listing on the 7th of April. And as I said, this is going to be the biggest listing at £8.8 billion on the London Stock Exchange since 2011.
We shall keep a tab on that IPO. Well, Boohoo has published a full list of the UK clothing manufacturers it works with after severing ties with hundreds of companies following a damning review last year of its supply chain. Now, why is Boohoo, severing ties with these manufacturers? Why are they taking this step?
Yeah, Chimmy, this is another scandal involving the rights of workers here in the UK. Boohoo are basically trying to clean up their image. They're one of the few fashion retailers here in the UK that have done stupendously well over the past 12 months because they haven't had to face shutting their stores. They've earned billions over the past year, but they were engulfed in a scandal last year due to the treatment of their workers in a Leicester-based factory. This has been tied to modern-day slavery. Some reports suggested that some of the staff working in their factories making Boohoo clothes were earning £3.50 per hour. But I think what was the most damning part of the report was the fact that they didn't have the protection of COVID-19, and the cluster at this Leicester-based factory was supposedly spreading coronavirus within that region. This knocked over £1 billion off of the share price of Boohoo, and ever since then they've tried to show that they're more transparent, though there are a couple of more legal issues that they have to face. I think last month it was reported that they could even have a ban of exporting to the US, which is a major market for them because of the modern day slavery. They've now released a list of the factories that they'll be working with. They're no longer going to be working with subcontractors. According to their bosses, this is where some of the trouble was building up, because they were handing out some of these contracts, but of course these contracts were handed out to some scrupulous individuals. So they were working with about 500 factories here in the UK. That's been reduced to less than 100, and they're hoping that this will take off some of the heat that they've been under over the past year or so.
All right, let's do an intraday call to the markets. Bring us up to speed with the numbers and their drivers, of course.
Yes, well, the FTSE started off in the red this morning, still in the red at intraday. Of course, there's so much going on overseas. We've had the massive tech sell-off in Asia and on Wall Street. But in the UK, it appears to be the retail sales figures that are keeping the FTSE in the doldrums. In March, retailers have suffered once again. They are hoping that perhaps on the 12th of April, when non-essential stores will begin to open, that they'll start getting those sales back in the time for summer. So the FTSE All Share is down 0.33%, the FTSE 100 is down by 0.26%, and the FTSE 250 is down by 0.28%. In the currencies market, the British pound is up on the US dollar by 0.29%, up on the euro by 0.30%, and up on the Japanese yen at intraday by 0.58%, Jimmy.
Well, Juliana, we have just one day to go. We keep tracking those numbers in the market and, of course, all the developments there. Enjoy the rest of the day. And let's look at the Asian Pacific markets, where shares were mixed today, though tech stocks in the region took a hit following a sell-off in the sector overnight on Wall Street. In Japan, the Nikkei 225 rose 1.14%, while the Topix index gained 1.14% as well. South Korea's Kospi closed 0.4%. Mainland Chinese stocks were mixed on the day. Shanghai Composite slipped 0.1%. Shenzhen Component advanced 0.103%. The S&P ASX 200 in Australia closed 0.17%. We'll take a break. When we come back, we'll look at the domestic commodities market. To stay with us. Well, livestock production contributes about 12.7% of the agricultural GDP in Nigeria. Pastoral communities produce the bulk of milk milk consumed in the rural and urban areas of Nigeria, the gap between supply and demand for dairy products is widening as a result of increases in population and urbanization. Let's talk about this with Aisat Dahoud, one of the research analysts with Financial Derivatives Company. Hello, Aisat. Good afternoon. Good to see you.
Good afternoon, Timothy.
So last year, the central bank restricted forex access for the importation of milk and dairy products to 6 companies to achieve a twin objective of reducing forex outflows and encouraging import substitution. So far, what would you say has been the impact of this policy on the Nigerian dairy industry? Has it really made any impact, particularly in shoring up our external reserves?
Okay, let's start with the external reserve. There are 2 major factors that determines the external reserve. That's oil price in the international market, because Nigeria's about 90% of Nigeria's revenue is from sales of crude oil, and oil prices has been volatile since the pandemic. Another major factor that drives our external reserve is capital inflow, which has been depleting, and amongst other things. So the external reserves has been depleting for like the past 10 months. May 2020, I recall external reserve recorded $36.5 billion. Currently, it's been depleting up until March 18th. That was last week when we started seeing an upward trend, slight upward trend. So as at March 23rd, it's reading $34.5 billion. So you can see the huge difference there. So the CBN in its aim to reduce or to improve, to reduce forex scarcity, because this has resulted to forex scarcity. In its aim to reduce forex scarcity, it has gone on to restrict access to forex for importation of milk. Lest I forget, like you mentioned earlier, the Nigerian dairy industry is currently challenged with huge demand gap, and then it expends about $1.3 billion for importation of milk. And let's also know that, in this industry, the demand for milk is rising by the day. We have over 3,000 demand for milk, over 3,000 liters of milk as a demand for milk every day in Nigeria. So if you look at all these factors that is depleting the external reserve and what the CBN has done, that's a good initiative, which the real impact is not going to be felt immediately. However, this has made major players in the industries like Chi, Wamco, Arla, those are the producers of Dano and the like, to invest heavily in backward integration. They've invested heavily in backward integration, while some other players, exploit the strategy of miniaturization, whereby the content in each pouch are reduced. And some others explode, price increase in price. So all these are the impacts we've seen to come to play in the industry.
Now, looking at the agricultural sector, that sector reported a real growth of about 3.42% in the fourth quarter GDP figures for 2020. Now, when broken down, it showed significant improvement in crop production and livestock. However, it did not reveal any appreciable growth in the dairy segment. Why is this happening in spite of these restrictions and initiatives on import substitutions? And of course, you talked about the backward integration.
So the agri sector has improved significantly, yes, and solely because of the two segments. That's crop production and livestock, like you mentioned. The livestock segment has been improving consistently, and for a fact, I can tell you that all the quarters in 2020, except Q1, that segment has improved quarter on quarter if you compare it with quarters in 2019. For the whole full year, I can tell you for a fact that the livestock segment improved by 175 basis points. The growth rate, it improved. The growth rate was recorded at 1.9%. That's significant, but it's not as much as appreciable. People are not appreciating it yet because they're not really feeling it. So the reason for this challenge is that our demand and supply, the gap is different. It's very, very huge. We supply the kind of breed, first of all, the kind of breed we use in Nigeria, the white Fulani breed of cattle, it produces less than a liter of milk per day. And then we have about over 3,000 liters of milk demand every day, and it's rising because population keeps rising daily. So they're challenged, first of all. And then currently in this industry, that depends solely on importation, mostly, okay, let me say largely, not solely, they depend largely on imported milk before they now process it. So, and again, another peculiarity to this industry is the kind of value chain. The value chain is designed such that the milk from the cattle farmers, that's the herders and all of them, when it gets to the processing place, where the manufacturers process this and convert it into milk and it's all the other derivatives for consumers' end use, they are not sufficient. Many of them fail the hygienic test, the microbial test and all. So the quantity they get that is sourced locally is small compared to what is imported in order to meet demand. Even what is imported is still not sufficient as much as that because of other challenges, you know. So all these three factors, if we should engage our local farmers in aggressive crossbreeding, and we are able to build an efficient farmers cooperative society whereby they are consistent, because there's no consistency in what we get as supply from the local producers. And we get consistent supply. And then they're also trained on how to make them hygienic, how to transport them hygienically from the farm to the processing centers. One could have a collection center around close to one of the cattle farmers cooperative center in the northern part there. But many of what is supplied to that collection center, half of it is gone to waste because it fails that hygienic test. So, you know, all these are what is making us not to get that appreciable growth of this initiative yet. And again, this initiative in its real terms, it's going to take a while, about 5 to 10 years before we begin to see what
some of the impact. All right. Yeah. Thank you very much, Isaac, for your time today. And the African Development Bank has launched the second phase of the West African Capital Markets Integration Project to establish a common securities listing and trading platform across West African bourses. Phase 2 of the integration project, financed by the grant, entails harmonization of regulations in participating capital markets, as well as building capacity of market regulators and operators to handle cross-border investment. In December 2020, WASMI received a grant of $850,000 from the Capital Markets Development Trust Fund, a multi-donor fund administered by the African Development Bank and supported by the Luxembourg and the Netherlands. Expected beneficiary countries are Ghana, Nigeria, the Gambia, Guinea, Liberia, Sierra Leone, and Cape Verde, as well as the 8 countries of the West African Economic and Monetary Union. And our Afrexim Bank has moved into an era of a structured financial model to support both upstream and downstream operators in Africa's oil and gas industry. Afrexim Bank Regional Chief Operating Officer for Southern Africa says the bank's financial instruments have evolved from the initial corporate finance principles to the introduction of structured oil field services financing, and more recently to reserve-based lending and borrowing-based financing for upstream activities. According to him, the bank recently introduced a project preparatory facility in support of early-stage expenses in project finance, which has been very attractive to entrepreneurs who have bold ideas but may not have enough capital in the beginning to finance their project. And the U.S. Trade and Development Agency has announced a grant for a feasibility study to connect more than 200,000 women, farmers, and rural citizens to new solar-powered main grids in Kaduna, Kogi, and Plateau states. The USTDA-funded feasibility study will include site surveys, preliminary engineering, economic and financial analysis, and an assessment of the project's likely developmental impacts on rural women. The study also will create business opportunities for U.S. equipment and services suppliers in Nigeria's mini-grid sector, while supporting up to 20 megawatts of new solar power in rural communities. The grant will support Nigeria in meeting its rural electrification goals, as well as kickstart life-changing projects for communities, women, economic development, and the agricultural sector. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.